I had to escape that to then get into mentality of abundance, and I could be successful. It was like going from a mental shift of money is something I don't have and shouldn't even think about to like, I can become rich.
What are some of the big mindset shifts that you've had in that time toward money, savings, and how you think about what you do with your energy?
I discovered the difference between money and store value and wealth. As I kind of found gold, I also found Bitcoin. You're going to be able to build a Bitcoin Citadel if you don't screw up the next few years, if you mine enough, if you buy enough, if you generate enough income to dollar cost average into Bitcoin. You'll have the wealth required to build a Bitcoin Citadel, but will you have the skills to do it?
Welcome back to the Abundant Minds podcast. Today we are thrilled to have Brad Mills on the show. Brad and I actually met as members of the same business coaching program, and we were the only two Bitcoin guys in the group so far. Brad is a lifelong entrepreneur. He's a Bitcoin educator, was an early miner on the network, and is also extremely active in the Bitcoin venture space. He's been deeply involved since 2011, which was very early for those of you who don't know. He's host of the Magic Internet Money podcast and holds positions in, among other leading companies, Ocean Mining, Gridless, Geyser, Relay, Lightning Ventures, Jan3, or as Adam Back says, 3Jan, and many other of the leaders in our space. And Brad is also, if you aren't watching on video, the clear front runner in the Best Beard in Bitcoin contest. And just a super warm and kind guy. So very happy to have him on the show. Brad, always happy to have a Bitcoin OG on the show. And welcome on. Thanks for taking some time with us.
Thanks, but you left out something very important. I can also tie my own shoes. Appreciate if you would include that in the edit. Can you put that, rewind?
Please make sure that is the clip, is that Brad knows how to tie his own shoes.
I'm a big boy!
Brad, how did you find Bitcoin? Why did it come across your radar so early on?
I had just a thought there before we get into that. Mm-hmm. Is the name of this podcast the Abundant Minds podcast, or is it Abundant Minds with a D?
It is the Abundant Minds with an M-I-N-E-S, but
maybe
you're privy to this now. We're actually renaming it the Hosting BTC show.
Oh, okay. That's interesting. Yeah. I like it. Yeah. My Bitcoin, well, your audience is, you said, mostly people that are trying to get into mining via potentially like other industries like real estate, where they're trying to figure out other ways to get yield. They're trying to diversify from real estate. Do you know, is that like your primary listener?
Yeah, they're usually finding us, they're either already invested in the Bitcoin space and looking to get into mining, or coming from some other space, like you mentioned, real estate, where there's a cash flow component they're trying to figure out how to unlock through something like Bitcoin mining.
Right. Well, I mean, I can tell you about my Bitcoin story from the perspective of an entrepreneur, because that's how I found Bitcoin. I was originally, I went to comedy school, and I was like trying to write movies and make movies. And after realizing nobody was going to give me any money to make a cheesy 80s horror movie and go take a bunch of teenagers into the wood and chop them up, I was like, okay, nobody's willing to give me $50,000. This sucks. I better Google how to make money online so I can start figuring out how to make $50,000. Because I came from poverty in the East Coast, where, we didn't have anything really. Most people there, it was economic depression. Really, we grew up in the 90s during an economic depression in the East Coast, where it was unemployment rate as high as like 30%. Just the same sort of like problems that you see in like depression movies, like Cinderella Man, where they make a big deal out of having to go back and, the kids want milk for their cereal, but they don't have enough money to buy milk, so they have to put water in the milk, and then it's like, oh, here, we got milk again. Like, we did that every day. It was like called powdered milk. That's what we survived on. But, I had no financial literacy, so it was hard for me to kind of like go from absolute zero to figuring out how to store my wealth, which is where I am now. I've found a vehicle that's the best way to store your wealth over time. But back then I was like, how do I how do I make $50,000 so I can make this movie? And then I got quite an education getting scammed by survey, Ponzi schemes, and network marketing scams, and all kinds of stuff for 2 years or so. I paid quite a tuition of time into all these things that weren't working. I learned what didn't work. And then I decided, like, as I got into all these different things, I was like buying leads, like work from home leads. So it was like people had filled out a survey like me that were trying to figure out how to make money online. They were trying to make, like, how do you make money online? Oh, fill out the survey, we'll pay you. And then, like, they sell me to somebody else who's trying to scam me, right? That's pretty much the model there. So I got up this thing where I was like, okay, I'm buying leads now. And then I realized all the leads were like people like me. They were like clueless idiots that didn't know how to do anything and were trying to just get some money to make a movie or something. And I started a business selling leads. I was like, oh, if I'm doing this and I'm early technology adopter, I know how to type, I know how to like make a website, I'll do this. And I started selling leads. So I was doing like paid to read email and stuff like that, where it's like you get paid 1 penny to read an email, you get paid 2 cents to click a link, like that sort of stuff. And I kind of scaled that up to where it was like paying for my movie, my Columbia House subscription or whatever we were using back then instead of Netflix. It was like 2003 or 4. And then I was like just continually showing up, just putting in the work, grinding, learning new things, reading books, How to Win Friends, Influence People, As a Man Thinketh, Think and Grow Rich, all these mindset books that the network marketing scams got me to read, because they were like, we want to really indoctrinate people with a positive mental attitude, but as long as they associate their money with us, we'll be good. But if they go off and do their own thing, excommunicate them! Kick them out of the business! So I was one of those people that were like, my tuition was all these books these network marketing people were getting me to read, and I'm like, oh, this is great stuff, I can be rich, yeah. So then I started a business, and I started selling leads, and they kicked me out of the network marketing thing. And I was like, I guess, what kind of scam is that? You're not really working for yourself if you can be kicked out of it. So that's the big thing in MLM. It's like, be your own boss, work for yourself, and then actually you can get kicked out of that. You're not your own boss. You rely on that person. So I learned that lesson of like sovereignty, like if you're going to create an income stream, don't create it off, or if you're going to any kind of value, try your best to be in control of that, and don't have someone else that can make the decisions get in the middle and get in the way. And I then got into this Facebook development, and Facebook development was back in 2007-8 when they first opened up the API. I had all these ideas for lead generation businesses and fun little games and movie trivia, bar trivia apps, just shit like one of them was called what was it called? Like Be My Biatch is what we called it, where it was like the whole thing was just that you've bitch slapped somebody, and then it showed up on their Facebook wall that you were now this person's bitch, and you have to bitch slap somebody else because you gotta have a bunch of bitches. So it's called Be My Biatch, and then if you wanted to bitch slap somebody that's already a biatch, you'd have to do like a rock, scissors, paper to get them, So it was like this stupid idea, but all these weird little ideas really took off back in 2008 or 9. It was like zombies and vampires and all this stuff. And I had one game that we really hit it off with after a few months of doing this, that we got 1 million players and started making like $100,000 a month off of affiliate ads on just serving up ads. And I was just like, oh my God, this is crazy. Like, I come from this like basically depression sort of area where it wasn't as bad as the depression movies make, it was like we still had toilet paper and power and stuff. It wasn't like 1920s bad depression, but it was like nobody had any money, but everybody was okay with it. And you just paycheck to paycheck. Money was just something we didn't have, but we all played instruments or wrote plays or acted or did something fun and creative and useful with our spare time. Very creative, artistic place. I love the East Coast. But yeah, I had to escape that to then get into mentality of abundance, and I could be successful, it was like going from a mental shift of money is something I don't have and shouldn't even think about to like I can become rich. I just have to think about it more and know that I can achieve it. And then just going and just trying everything I could. And then eventually, after 30 or 40 failed businesses, like startup ideas, where I was just bootstrapping, one of them really hit. And then we turned that into a real business. And that lasted for a few years. But I scaled it up. I had like a bunch of employees and stuff like that. And scaled up to about 18 people. We had quite a high burn towards the end of it. But, for the first time in my life, I have bought a new car. I have a house now. I'm a middle class person who has savings, and I started to think about what do I do with this money now that I have it. And at first, the phase was like gathering resources and trying to make it and trying to figure out how to make some money, and then it was like, what do I do with the extra? Because now I've got more than I need, and obviously there's $100,000 isn't a lot of money, but I was thinking like, I was doing the math, right? Like, oh my God, if I keep doing this for the next 10 years, I'm going to be a bajillionaire. But this was during the 2008 to 11 great financial crisis. And, if people in real estate obviously remember this, right? Like if they're old enough, there was massive liquidity crunches and loans started to get recalled from banks and people got into trouble with their interest rates and the value of your collateral dropped. Like if you're got multiple properties and you're like playing that game of leveraging and taking debt, like before you know it, your payments are just crazy and you can't sustain them. So we were in this like period of uncertainty where I was kind of trying to protect my value rather than make money at that point. I'm zero financial knowledge or experience. So 2011, I got some extra money and I'm an early tech adopter. I see Bitcoin because I'm looking into gold. I started reading like Robert Kiyosaki books, like Rich Dad, Poor Dad stuff. Yeah. He talks about gold. I'm like, I got to get me some gold. So I'm like, I'm not going to put my money in the stock market. That's way overvalued. It's a Ponzi scam. I don't want to support that. The banks are getting bailed out, while the public gets foot with the bill. That doesn't seem right. It was just like I did not trust that thing at all. And I didn't want to be an active trader. I didn't want to be trying to find stocks to buy that were undervalued. And I didn't want to just put it with a money manager that was going to put it inside of the Ponzi scheme. I was like, I don't want to support that. I want to protect my money outside of the control of which actually I feel is like a moral problem. Where the savings of people like me get debased to protect the people at the top through bailouts. So I was like, I don't want to be putting money into bonds and stuff. That supports this Ponzi scheme that creates the wealth gap that we have and the thing that I struggled with and came from. So as I kind of like did a lot of research over 3-4 years, well, actually it was only a couple years at that point, but I mean it was 3-4 years leading up to making the Bitcoin, discovery. But it was basically like I discovered the difference between money and store value and wealth. And as I kind of found gold, I also found Bitcoin because, as I was researching about gold, like I came across this thing talking about digital gold, and this YouTube video was talking about digital gold, and I was like, what's this? This sounds pretty awesome. I gotta check this out. And when I saw it, I was like, instantly, this is going to be like worth $1,000 someday. This coin. So I bought some coins and I started mining them. And at the time when I heard about it, it was $5 per coin in April 2011. And I like went down the rabbit hole and I started getting my mining rig set up and wiring my money off to Japan and doing all this stuff to try to get some Bitcoin. And in the like month period it took me to scale up to get all the rigs in from Newegg and get the Bitcoin on Mt. Gox, it was like $10 a coin. So it had already increased 50% or 100% in the month that I discovered it and wanted to get some to when I actually got some. It was up double, and I'm like, I'm too late. Like, this sucks. Like, I missed it. At $10, I'm like, I missed it. I'm too late. Because at that time, it was already out for like 2 years, and like Satoshi was talking about... Satoshi was still on the forums, but he was like talking about how he's going to leave and stuff. I'm like, oh my god, I missed it. It's too late. So isn't that silly? Isn't that funny how I thought I was too late when it was $10 in 2011?
Unbelievable. And what a series of mindset shifts, right? Like you've been in the scarcity mindset, there's not quite enough, all the way to being a very early entrepreneur in the Bitcoin space and kind of rewiring how you think about money to, 13 years later, people come to you to be a supporter and a contributor to their projects. And that's such a crazy sequence of mindset shifts. Like, how do you, from that time that you discovered it, started mining it, started acquiring it, to now you've been exposed to the space for over a decade? I mean, what are some of the big mindset shifts that you've had in that time toward money, savings, and how you think about what you do with your energy?
Well, that's quite a long sort of like conversation. I mean, I could ramble on for 20 minutes about it if you want me to. Otherwise, if you want to break it down, I mean, I can, however you want to go. But I'm fine to
please.
Ramble, but I don't want to
I got no appointments. No appointments after this.
Well, and I'm also trying to frame this from the perspective of your listener, who's probably an entrepreneur, right? So I realized that I was thinking wrong about Bitcoin because I was thinking with my entrepreneur brain. I was thinking about it like, I got to make money with Bitcoin. And that was one of the biggest mistakes I ever made in my life, because I sold half my Bitcoin at $30 because it got in at 10, right? But then over the summer, it went up to 30. So I was like, oh my God, I'm not late. I'm a genius. I just tripled my money. I'm going to sell half. Because I had, you hear that advice like...
Yeah, diversify. Take some off the table. Take profits.
Not just it's not just diversify, but it's like the house's money. Like take your principal out and then let your money ride. It's the house's money, and that's just this like common, easy to digest trope that poor people think about and vomit spread around like in the mind. And I didn't realize like I was taking that advice from my poor friends. Oh, you let it ride, take the house's money or whatever, like, and then let the rest ride. Like, you don't have any money. Why am I listening to you? I should have thought about it like that. But, and a lot of entrepreneur influencers I've discovered over my period of 13 years in Bitcoin and more than that as an entrepreneur are just as clueless as poor people about wealth and store of value and what money is. And so, like, some of the most, well-respected business influencer leaders, mentors, coaches, whatever, are completely clueless, just as much as your next-door neighbor when it comes to storing your value. And they have, like, entrepreneurs have almost like a unfortunate flaw in that they can't help everybody around them. Because you need to have a 1% mindset in order to be a successful entrepreneur. You need to be coachable. You need to be willing to do the work. You need to be always open to your ability to succeed and thinking and obsessing over your goals. You need to be thinking outside of like the standard, I'm just going to chill and relax and watch Netflix, sort of get away from my work thing. You got to be thinking about bigger things all the time. And sure, you can relax and chill, but so because of that relentless drive that most high-level entrepreneurs have and advice that they give on social media and on YouTube, they're completely eliminating 90% of the viewers that are probably going to watch their content by stepping outside of their relatability window. Do you know what I mean? So like when I came up, I was listening to like what's the dude, 4 Hour Workweek guy, Tim Ferriss.
Yeah.
Like guys like that. And for like a young millennial hustler, like a Tim Ferriss is like a great person to listen to when it comes to grinding and trying to be successful. But like most of the folks listening to that are not going to be successful entrepreneurs. and they end up spending a lot of their money on expensive coaching and stuff like that, and then like failing and targeting all their content for just the entrepreneurs. So with Bitcoin, I discovered for the first time, and it's kind of like maybe the network marketing stuff that I had gotten sucked into that got me this mindset of wanting to like help everybody, because the idea that they get you with the MLMs is like anybody can work from home, anybody can be their own boss, you can do your own home parties, you can make money with our business, no matter if you're just like a college kid that's broke or like a stay-at-home mom or whatever. It doesn't matter. Like, it's inclusive, anybody can make money with it. But that's a scam mentality. It's like a cult mentality. They do that to kind of get you to go make up a list of all your 100 closest contacts and then start cold messaging them about your scam pills or whatever. So it's like, it's kind of like manipulative, right? But that idea that you can like take everybody with you is what Bitcoin is like. Not, it's the promise of that mentality of being able to like bring everybody onto the right side of your business opportunity or whatever it is, because most people just want to work their job, have some fun, enjoy their family, do their hobbies, and then like work hard and enjoy their life and not have to see their savings get debased over their 40, 50 working years of life and retire poor, like purchasing power poor. Maybe they got $1 million in 2050, but like, what's $1 million going to buy you today? It's not even like, a middle class house in average town in Ontario is like $700,000-$800,000. So, it's like the value of the money over time continues to decline as they print more of it, and that separates. There's not like there's going to be no middle class anymore. It's just that the value of the dollar that you're saving is declining, so the wealth disparity gets higher in purchasing power. It's a really hard concept for people to understand.
And so it happens over such a long time. It's a slow, insidious process where you don't even realize it's happened until you've got a chance to look back many years later and realize what's happened over the course of those years.
Yeah, and it's like, for me anyways, I initially had the mindset of like a hustler, entrepreneur, solopreneur type of person that was trying to grind and make money and reach my goals. But then also it's like, I want my family to be able to also make money and elevate them, because everybody around me was poor, right? So I was like, I want to elevate the lifestyle of people around me. So I was thinking about Bitcoin from the wrong angle at the beginning, even though part of my brain was like, this thing is going to be worth $1,000 someday. I got to keep it. And I want some more. I got to get more of it. Part of me was just still operating with that like hustler mentality of just grinding and like, what am I going to, okay, I'm going to sell this and, take the money and put it into the next business or whatever, make some more money, because it's all about making money. But then as the time went by, the more and more time went by, the more I sort of like realized that Bitcoin is like, Trace Mayer used to say, a once in a species invention. And when you really think about that, like, it's the first and only time that we can discover digital scarcity, and that if that continues to be, if the monetary properties of this thing stay the same as they were enshrined in the Genesis block over 10 years, it's just inevitable that more and more people will start to understand it. They'll start to realize what it is. It'll start to become more and more important as a role in the financial world. And because of its capped supply of 21 million and the disinflationary nature, it's just inevitable. It's going to go up in price in dollar terms. So I realized that like I was using the wrong mindset when I was thinking about Bitcoin, because entrepreneurs have a little bit of a flaw in that it's like Dunning-Kruger, right? Especially successful entrepreneurs, because they've been successful. If you've like been successful in real estate, you probably think you're hot shit when it comes to politics or the vaccines or whatever the hell the latest thing is. You probably think, oh, I have a very good opinion, you should listen to me. Well, like I was kind of like falling into that trap, and I see so many of my friends falling into that trap when it comes to Bitcoin because they just don't understand really what it is. Like they just look at it like, oh, I'm making money with this. It's a trend. Like it's popular. I got to get some. I got to make some money with it. But we're talking about a protection of your assets for the next 100 years, for your legacy, like your generational wealth, like we're not talking about flip it for a 2x or a 3x. I mean, you might as well go just do some Amazon FBA or some other trendy like AI masterminding or something like that if you just want to make some money. Because Bitcoin is like, if you can harness inevitability with Bitcoin and think over longer time periods and be able to slow down your sort of like disconnect from the programming that we've all been brought into with debt-based fiat life and consumerism and entrepreneurship even, honestly, like we're trained to think about, because our money is inflationary, we're trained to consume and to raise prices and to just always be pulling in more, when Bitcoin actually, in Austrian economics and, in general, sound money, the thesis of sound money, when you start to understand it, you start to realize that, like, you take less risks and you can think over longer time periods because you're harnessing something else. It's like a historical part of your DNA or investor DNA or something. It's not this 20th century, 21st century grinding hustle culture part of your entrepreneur DNA. So it took me a lot of financial lessons learned to discover that. I mean, one of the common things that people will do when they get into Bitcoin is start to trade. They'll start trying to trade Bitcoin. They'll start trying to time the markets and sell high and buy low and all that stuff. That's entrepreneurial habits. That's like the hustler habit. You're like, oh, I'm going to grind. I'm going to make some more money. I'm going to learn this. Well, the markets are like a rigged game, basically, especially cryptocurrency exchange markets where they're all opaque and the exchange is down again. I mean, it's no different than the GameStop fiasco with Robinhood, where they didn't actually have the source on all the shorts, and then it got through Wall Street Bets. They exposed that there was naked shorting, and they had to shut the shit down, and you could only sell, you couldn't buy. It's like the same shenanigans happen in the traditional markets, but it's basically, no matter if it's a Bitcoin exchange or a cryptocurrency exchange or whatever, you should not try to trade it. It's like, unless you're going to put in the amount of hours that you put into learning your industry and the amount of like School of Knocks, mistakes that you made in your industry, whatever industry you're coming from, unless you're going to put that level of work in and treat it like a full-time job, where you're actually learning about trading and you have risk management protocols in place and what counterparty risk is, and you can set some rules and stop losses, and you execute the trades emotionlessly, and you're like following a certain routine and journaling your thoughts about trades and getting, you know what I mean? Like investing in coaches and stuff. Unless you're going to do that, you're going to lose your money guaranteed 100%. Like, it's like 100% guaranteed you're going to lose. It's just a matter of like how long you stay in that market for. Now, somebody might be the edge case and they may do it once or twice and win and then pull out, and it's like, that's like a casino, because you're basically gambling at that point. But unless you treat this thing like a job, you shouldn't trade, because you're just gambling. And I went through all this stuff. So in my 10 years, like, or 13 years, I should have just bought Bitcoin and done nothing else. And I would have been better off with the last 13 years of work that I've done. Bitcoin beat me. And it beat Warren Buffett. Like, it doesn't matter who you are. Like, Bitcoin beats you. And why not just harness the inevitability of that? Instead, now the other thing that you can do, that I've discovered I can do, is, as an entrepreneur, I still have that desire to start a business and make money and kind of apply those skills, because it's just part of my DNA. I started investing in other entrepreneurs. I started angel investing. And now that I've joined Dan's coaching program, like I got the bug back where I want to kind of start outside of business, outside of Bitcoin businesses. I want to start like a media company and maybe a coaching business that helps high net worth entrepreneurs secure 7-8 figures of their wealth in Bitcoin. Like white glove service, stuff like that. Like that kind of speaks to me. I could see starting up an entrepreneurship endeavor like that, but not like trading and gambling on meme coins and trying to do all this stuff, because that's just like you're in a casino.
Part of your thesis or your ethos on your website talks about being a value maximalist. So everything you just laid out about, you didn't beat Bitcoin. Almost none of us have beat Bitcoin, but you still want to participate, right? There's all of these interesting parts, Bitcoin or Bitcoin adjacent, that it's hard to not try to play a part in, especially if you see it as important. How do you look at making those decisions of where to allocate capital when you've got this benchmark of Bitcoin's performance as you're kind of, holding you to a really almost unachievable standard by most investors' standards? How do you look at where you put capital? Are you trying to outperform it, or are you trying to support the network in general? Like, how do you make those decisions?
I think you can beat Bitcoin, obviously, if you're like an early stage startup in growth mode that's going to grow at like 300% a year over the next 5 years. You can beat Bitcoin, but it's very difficult. It's not that you shouldn't try. It's just the way I'm thinking about it for, my own, because I learned a lot about risk management after I lost half my Bitcoin selling it too early. I realized, hey, that was a stupid mistake. Like, I just did a YOLO thing there where I made money, like I'm up in money terms, but I really liked that Bitcoin that I sold. Like, why did I sell that thing? Like, what caused me to do that? I want that back. And now it's $500 a coin, so okay, I'm going to start trading it to try to figure out, I'm going to earn it back, right? I'm going to go chase it back. And then I lost more on Mt. Gox because I had my money on the exchange, and Mt. Gox gets hacked and goes under, and there's like more Bitcoin gone. So, and then I've done multiple things over the years where I've done those like YOLO sort of maneuvers, and actually it was that Mt. Gox which sort of was the bigger mistake, because the first one was just like a flaw in my understanding of investing versus trading. And I invested in Bitcoin, and then I traded out of Bitcoin, which was stupid. Like, I invested in Bitcoin because I had conviction that digital gold, digital scarcity, non-sovereign, peer-to-peer cash was going to be extremely valuable in the world. And then I used bad advice from like gambling mentality to like trade it back for some shitty fiat cuckbucks. So I'm like, why did I do that? That was a terrible idea. Well, it's because I didn't go into it with an investor's mindset. So like, you can have like Bitcoin businesses where you're generating Bitcoin as part of your income strategy, and then you're just an entrepreneur earning Bitcoin, and you sell your Bitcoin for dollars to pay your bills or whatever. I mean, then you're an entrepreneur earning Bitcoin. Bitcoin is just like pigskins or coffee or whatever at that point. But then there's investing in Bitcoin with conviction because you understand money and you understand the value of this thing, and it's severely undervalued. Then you want to hold on to that thing as long as you can and never sell it until it gets to like a certain X percentage of your portfolio, of your value, of your net worth, where you can start to think about, okay, maybe I'll diversify a little bit out of here to pay off my mortgage or to buy a business or whatever you're thinking about, right? You set your numbers however you want, but most people listening to this don't have enough Bitcoin. I mean, I just guaranteed that like 99% of the world does not have enough Bitcoin. Unless you got at least 10% of your net worth in Bitcoin, you don't have enough Bitcoin, so you should never think about selling.
Oh
the
man,
top.
you got to pump up those numbers. Those are rookie numbers.
Right? Like, if you got less than 10% of your net worth exposed to Bitcoin, all you should be focused on is accumulating as much Bitcoin as you possibly can with whatever skills you have. If you have a lot of money because you got an exit out of a business for 8 or 9 figures or whatever, then you can one chunk lump sum properly right the situation and get a good allocation of Bitcoin. But if you're just like a startup entrepreneur who's trying to hustle and grind, and you know what I mean, like you should set up a plan to start saving a percentage of all of your bringing in into Bitcoin, and just that's your retirement fund. So like 10%, 20%, whatever you feel comfortable with as maximum as you can get into Bitcoin, just dollar cost average, doesn't matter what the price is, with a 10-year mentality. You shouldn't even think about the price. Like, it doesn't matter what the price is. The price is a rounding error for if this thing becomes a global reserve asset that's up there with U.S. treasuries, and central banks and if sovereign wealth funds are using U.S. treasuries and gold and Bitcoin. You know what I mean? If that's the conversation we're having in 10 years.
Yeah, I mean, you're talking about your past self thinking of $1,000 as like the holy grail of what this can be, and we sit, 68 times above that.
Right.
It's just like you have no idea how high this can go or what this is. It's too big of a theme to play out to wrap your head around it.
Yeah, like back then I remember thinking about it from Tur de Meester or Max Kaiser or somebody like that back in 2012 or so had talked about Bitcoin as potentially replacing Swiss banking, right? Like that was the TAM. That was the total addressable market that we're thinking about back then. Like some people were, right? They're like, okay, if people were to just use Bitcoin to store their wealth in a place that couldn't be confiscated and have some financial privacy, then it could be worth $1,000. You know what I mean? Like that's the level we were thinking. But then there was obviously people like Max Kaiser and others and Trace Mayer who were thinking about it as like competing with gold, which would have put it back then at 25,000, I think, or something. Gold was about $500-$600 an ounce back then. So we're 1 trillion now. So yeah, about 20,000, something like that, I think, is the math on that. If Bitcoin was the size of gold when it was smaller, and gold was like 2 trillion or something. I don't know. Lower, right? So like every cycle you start to realize more and more and more, and you get more confident actually as well. Like that's the one thing for me that, I mean, I just learn every cycle. I'm learning more, I'm reading more. I've read a lot of books about risk management, historical financial bubble cycles, regulatory situations, industry booms like the Rockefeller autobiography. Like that's a great one. Titan. You'll kind of learn about the development of an entire industry and the fortunes that are made in people that create the industry. And just the mentality of like, what are they going through with the regulatory changes as the government tries to grapple with what this thing is and the creation of a new industry, and just market wizards and things like that. Books about money managers and how the mistakes that they made, and then the biggest thing that I think I took from all this learning and all this reading and everything I did was separate in your mind if you are like an investor or if you are a trader or an entrepreneur. Like those things need to be separated. Bitcoin is like a special thing that you shouldn't think of with your entrepreneur brain or your trader brain. You should think about it with your investor brain, and if you don't have an investor brain, you need to outsource your decisions to a Bitcoin maximalist, basically. Like you need a Bitcoin maximalist advising you on what you should do. If you want to maximize your value, if you want to have the most amount of value 10 years from now, you should never sell Bitcoin. I mean, that's pretty much, unless you're the 1% person who can make the decision properly, identify the trend properly, take the proper risk, instead of just YOLOing in and out, like you're going to lose. So definitely develop a mindset of an investor, thinking long term. Get yourself Bitcoin multi-sigs, like get set up into multi-sig. So, if multi-sig is 3 of 5 or 2 of 3, where your retirement money Bitcoin, like your long term Bitcoin stack, is separate from your entrepreneur self or your FOMO sapien side that's going to go YOLO bet on futures or whatever. Like, you got to separate those things out and never let your FOMO sapien touch your multisig. Your FOMO sapien cannot go near your multisig. Just slap them away. Just tell them to go on Reddit. No, you're not touching these keys.
FOMO sapien, easily my favorite word that I've learned this week. Maybe this year.
Yeah.
So, I know you had some early experiences in mining as well. And I mean, I'm no stranger to rough experiences in mining. It's part of why we built our company the way that we did and wanted to offer people a safe way to get into it, you know, someone that they could trust who could handle it for them. But maybe talk a little bit about what you learned. I'm sure some of your mindset going in was, oh, if I can set up the infrastructure and the computers, like, I'll get more of this stuff and I'll get it at a discount. But what were some of the real life trials and tribulations that came from trying to get into that space for you early on?
Man, it was like, I've tried to do Bitcoin mining like 3 times, 3 different cycles. So like when I first heard about it, I was just like excited. I'm like, I want to start mining this thing. When I got into Bitcoin, like literally, there was still the button on the Bitcoin Core software that was like start mining, and you could like get the Bitcoins into your wallet. Like I had to mine with a graphics card. There was no ASICs yet. So I had graphics cards, like a rack of graphics cards set up in my basement. I had to get like a pony panel put into the basement because I was blowing the fuses. And then I had to, like, I got put up into a corporate power, level or whatever because I was using so much power. But it wasn't using an extreme amount of power. It was just drawing more power. I bet they probably thought I had a marijuana grow op going or something. So, like, I wouldn't be surprised if, like, there was guns going by my house, heat guns, looking for heat signatures. Because that was a fear back then. Like, there was actually some people on the Bitcoin forums that was like, I got raided by my local cops because they thought I was doing a marijuana grow op. And then, like, they saw the pictures, right? Because the guys gave them the pictures of the house, and it looks like there's, like, a huge marijuana grow op in the house because they're mining in their attic or something like that. So, I had, just a lot of trouble keeping the rigs up. That was one thing. It was, like, tons of little technical glitches. I remember we had to get these little metal butt plugs that we had to stick into the wall. I don't know what they're called, actually. There's little pins that you stick into the graphics card receptacle thing. Clearly, I'm not that technical.
Yeah, I don't even know.
but I had like all these graphics cards going, right? And we had them all rigged together, and I tried using Linux. I couldn't figure that out. I spent a lot of time trying to figure that out, and then the price went up even more. I'm like, screw this, let's just use Windows. So there was this guy on the Bitcoin forums who had like a Windows program where you could run, and mine Bitcoin. So we were mining with a pool. So it's not like I was solo mining by myself. I did have one computer going with a nice graphics card in it that I played Battlefield 2142 on, or Battlefield 2142 on, that I would mine, and I don't think I ever hit a block. But you'd mine on the pools, and then you just leave your Bitcoin in the pool. Like, that's how it works. So you just have an account on this dude's website who was actually running the mine, like constructing blocks, and you just point your hash power towards his website, and we were just trusting that these pools were going to pay us, and a couple of them made off with the Bitcoin. Luckily, I was using like a Legius pool, and I forget the other one, but they didn't ever take our Bitcoin. But I eventually stopped mining after a few months because the power bill was more expensive than the value of the Bitcoin I was mining. Like, I remember on my YouTube video, I put up, when I was doing it, I was like exaggerating, or I was being sarcastic, and I was like, oh, I'm mining 2 Bitcoin a day, because I was like yippee, like, I'm mining 2 Bitcoin a day, because it was only like $30, $40, and I'm spending like 40 or 50 a day on power. So I was like, yeah, I'm mining 2 Bitcoin a day. But like, you look at that now, it's like, holy shit, you're mining 2 Bitcoin a day just in your basement. So that's just the interesting personification of the value of storing your wealth in Bitcoin, because the a couple of days of mining back then ended up paying off my mortgage for the whole house in 2017. So I saved that Bitcoin for 6 years and then paid off my house with some of those Bitcoin. So, and that was a stupid decision. When I look back now at the decision I made in 2017 to pay off my mortgage, like, that was a stupid decision. The Bitcoin that I used in 2017 to pay off my mortgage is probably like, at least 4x higher. Like, even if I sold it at the top, it's 3 to 4x higher now. So, like, my house didn't appreciate 400% in 6 years. So it didn't make sense to do that back then either. But that's going back to the other conversation about you should never sell your Bitcoin.
Well, it plays
you were asking about mining.
I mean, it plays into, it's like you put on your investor hat for those decisions, right? And one of the things that I made the mistake early on, and plenty of other people have the mistake in the mining space, is you mix your entrepreneur hat, which is setting up a facility, getting these computers running, having them hash, running the mining business, and conflate it with the investor hat, which is you're mining something that you're supposed to hold on to. You're not supposed to be looking at mining as a way to go create Bitcoin and then sell it as soon as you get it. It's, as you're describing, the chief regret of anybody who's been smart to set up a mining op is as soon as they get the fruits of their labor or their, automated workers' labor, they do the wrong thing with it. They don't hold on to it. I mean, it's the chief regret is when it's, day by day unprofitable, you're in the red, so to speak, you're paying more for electricity, that you shut your miners off, you look back, 5, 6, 10 years later, and you wish that you had just took it on the chin for those couple days, because you would have gotten a 10 or 100x if you had been a little bit patient in that way.
Yeah, totally.
It's all about mindset, and I think you would agree with that.
Yeah, there's like multiple ways to think about mining. I've found over the years that because mining has become so competitive, I'm not I don't have an edge there. It's not as bad as trading, because trading is like the algorithms are trading against you. You know what I mean? It's like the supercomputers are trading against you, so you're likely not going to win. With mining, you just need to be a very good, efficient operator. And you need to have like efficiency of scale, which at the time when I was mining, you didn't really need that. You could be just some dweeb in your basement, like mining Bitcoin because you thought it was cool magic internet money, and you were just trying to be a part of some new cool technology that you found. Like, that was the time when people like me could mine and still actually earn Bitcoin. But yeah, like, the decision back then should have been to hold that Bitcoin forever, or for as long as possible, not to sell and whatever. But the idea is, like, currently I think mining, because I've done multiple mining stints as well. I did one in 2014, the cycle of 2013-14 we were mining. And we tried doing was altcoin mining into then selling it to Bitcoin. So we were like, okay, there's all these altcoins, so we're gonna start like buying ASICs for script ASICs and all this other stuff, and start mining Litecoin and Dogecoin and all this other crap, and we're gonna just like sell that to Bitcoin and hold on to the Bitcoin. Because I realized by that point, 4 years in, 4 years in, you got to hold the Bitcoin. The Bitcoin is king. Acquire as much Bitcoin as possible. So I'm like, okay, we're gonna just find an inefficiency here in the altcoin markets, and then I can make more mining this crappy altcoin. So I'm gonna do that and sell it to Bitcoin. So we tried doing that, and it worked for a while, but then it just it's inconsistent. These coins are just flashes in the pan, and then you got all this money invested into this ASIC for a friggin' shitcoin that's gonna be gone in 3 years. So then you got all this, you got to make your money quick, and that's back to the grind mentality of a hustler entrepreneur, which is like, okay, if you're really good at that, and also now you can mix entrepreneur mindset with hustler mindset with risk manager mindset, because now you know that you're an investor, but you got to like make the right call to get in and out of the equipment. You got to dump your equipment, otherwise you're in the hole in that. I realized like that's also a major problem. And so I realized a big lesson there. And it's funny because in 2021, this huge chip manufacturer came to me being like, we're going public with Ethereum ASICs. And I was like, do not do that. What are you talking about? They're going to switch to proof of stake. They wasted like $20 million researching and developing Ethereum ASIC technology. And I was telling them not to do it the whole time. Like, you guys are nuts. Like, they're gonna screw you. All the Ethereum miners are gonna get screwed that are trying to build for Ethereum mining. Do not do that. Anyways, they finally listened after burning so much money, but then they pivoted to something in Bitcoin, like Bitcoin mining. so I was like, okay, at least they learned. And actually now they're doing AI data center stuff and Bitcoin mining, high performance compute stuff. But everybody learns that lesson too about like altcoin, scaling up altcoin mining. It's a feast and famine, boom bust sort of
non-long term. It's not an industry to try to get cute in, for sure. You set up your facility, you're efficient, you try to make long-term bets. You know, as you said, you find your edge, and then you stick with it, and you make sure that you've got a strategy that you're constantly checking. You don't need to, as you said, bet on something that may not be around in a couple of years and try to get really short term about it. I mean,
you know what? If you think about it from real estate terms, it's more like the difference between setting up multifamily unit structures with property managers with long-term tenants versus trying to do foreclosure flips.
Yes.
It's like you might find some mold, or you might find that there's liens on the property, whatever. Like, you're going to get stuck with a piece of crap. The market cycle might flip on you. You know what I mean? Like, it's definitely, you can make money doing it, but you got to have the right expectations, and you have to be nimble, and you have to be the type of personality that can flip in and out and do all that stuff. And it's quite a business endeavor to try to be successful in that. We ended up not being very successful in that. So stopped that, and learned another lesson. Then again in 2017, I got the bug again to do mining. I was like, okay, this time I'm going to go in with one of the biggest miners in North America. He's got this new site that he's setting up, and he's going to sell us an ICO coin, which represents hash power ownership in the building. So we're like, I guess this is the new way to do venture capital. The ICOs, like all the Silicon Valley VCs are doing it. So we buy his Giga coin or whatever it's called. He was building like the Giga mine. And, this guy had a lot of experience. I knew him for years. He was one of the biggest miners in North America, and he could do it. He had the expertise, vetted by all my friends in mining, So, I don't know. He does it. We get this coin. And of course, the ICO bubble blows up, and we realize we way overpaid. We valued this thing way higher than it should have been. And then, what is a coin? An ICO coin or a crypto coin or whatever? It doesn't have any legal rights. You get no protections. You get no investor protection. So when this thing blew up, and mining is a very tough business for even industrial scale people to be able to pull off, and even he failed because he ran into a bunch of problems with setting up his mine, a bunch of delays. So by the time he got his mine set up, the whole generation of ASICs he had bought was now obsolete because the hash rate was so high. Oof. So it was 2 years by the time the thing turned on, and by that time we were making nothing. So they just went bankrupt. And because we had coins, not equity, it was we didn't have anything in the end. So it's just another cloud mining scam thing that there's been so many of those that I realized, again, if I had just taken the money, bought Bitcoin instead of tried to buy this mine coin thing. So dude, I've even in Bitcoin mining, I've made most of the mistakes. So what I decided to do this cycle, So 2021, 2022, there's like the fourth epoch of Bitcoin. We're going into the fifth.
Mm-hmm.
The fourth epoch of Brad Mills being in Bitcoin, I realized that I should just invest in equity of miners that know what they're doing and let them do it, and I won't, be involved in it at all. So then that's when I invested in companies that kind of like fulfill the value maximalism mission, as well as my Bitcoin evangelism as like a financial activist, like a crusading Bitcoiner, where I was one of the producers of the Bitcoin documentary. It's a short documentary called This Machine Greens in 2021, and it was like to combat the FUD about Bitcoin being bad for the environment. We created this documentary and explained how Bitcoin's actually net positive for green energy adoption, and I'm started to like switch into the mode of like paying my Bitcoin tithing by supporting things that will help disseminate good information and good products and good services into the world, and especially in places that need it the most, like South America and certain countries in Africa and stuff like that, more so than we need here, because we have monetary privilege here of having first world currencies that are like reserve currencies, and there's a lot of people in the world that need Bitcoin that don't have access to even that. Even though dollars are shit, it's like they don't even have that. So there's better bang for the buck to invest in like companies that are supporting renewable energy mining off the grids in Kenya, for instance, like in my opinion. So that ticks two boxes for me. It's like I feel like I'm evangelizing Bitcoin, and I'm doing my crusading Bitcoin mission with my, putting my money where my mouth is, and also getting some Bitcoin somehow through mining. Like I don't know if it's going to work out, but that's why I invested in Gridless, and Luke Dashert Jr.'s pool, which he originally ran, like one of the original Bitcoin pools, and then I was a miner on the pool back in the day, and then when I heard that he was actually starting up a pool again, I was like, this is something I'd love to support as well, and so I invested in Ocean, the seed round of Ocean, and for people who don't know, Ocean is like a pool that allows miners to do the block template construction. So the whole thing about Bitcoin and why it's special is that it's peer-to-peer. There's no ability to centralize or to censor transactions if 51% of the hash power is honest. And that is the kind of like once in a species invention that Satoshi made with Bitcoin, was putting the three things together of the blockchain and the monetary policy and cryptography to make a digital money that's disinflationary, that is censorship resistant and peer-to-peer. And the censorship resistant peer-to-peer thing comes in with the miners. Like the miners are crucial to be good actors, So with the way that Bitcoin mining has gone over the last 7-8 years, it's actually gotten a little bit concerning that Bitcoin is starting to concentrate more and more of the miners in the US. And like while many people celebrate that because China banned mining and then a lot of it re-centralized into the US, but also went everywhere else, it's kind of scary because there is a world where if 60%, 70% of the hash power is controlled by US public companies, and then the regulators come in and say, like, you have to start enforcing FinCEN regulations and travel rule regulations and all that on individual transactions, then these public miners will have to start using censorship sort of layers and start screening transactions and not mining certain transactions unless you like put your KYC documents stamped onto your transaction, that sort of thing, which is a scary sort of world to think about going into. So the solution to that is to disintermediate the mining pool from the Bitcoin transactions that get into the block. And the way to do that is with this thing called Stratum, or what Ocean created called Datum. It's kind of the similar thing, where now the individuals that control the hash power actually have a say in constructing the block, and because you can be anonymous and peer-to-peer, the pool doesn't have the ability to block the transactions because it's the miner that finds the block. Like, they have the ability to create the block, the template. So that is like a really exciting development in Bitcoin mining that's going to alleviate, the more it gets adopted by bigger miners and by mining pools, the better for decentralization, censorship resistance it is. So that's why I supported Ocean, and that's one of the things I hope to see more mining pools and miners use and care about, because like it's kind of, we're in the weeds. I probably lost 50% of your listeners when I was talking about that. So we're kind of in the weeds here. It's like, unless you really are a Bitcoin maximalist or a freedom maximalist or whatever, and you really value the censorship resistant free speech technology side of Bitcoin, you probably don't care about this. You probably are just like, I just want to make Bitcoin. I just want to make some money. So, companies,
it's the passionate few that we're still talking to.
Yeah, it's that intransigent minority concept.
Yes.
So that's the beauty of Bitcoin. And again, like, I'm gonna get even deeper in the woods if I keep talking about this. So maybe we'll save this for if somebody asks specific questions about game theory of block construction. We can talk more about it. But I love talking about this in the weeds shit. But yeah, I recognize that the level of what people care about might not be.
It's so important. So. I mean, miners are already a niche within a niche. If people are trying to make Bitcoin content more appealing, it's an even bigger lift to try to get mining content to be more understandable and appealing to a wide audience. So there's nothing wrong with going in the weeds. And to your point, these things that are being worked on right now are truly important. And I mean, what's cool about your personal journey in mining is you got to be part of the hobby phase where you were doing it out of your own building. You got to be part of the kind of gold rush phase where, small industrial was starting to capitalize on it. And it was still just an economic concept. And now you're part of the energy abundance and kind of like world reshaping phase of mining. And that was what pulled me in, honestly, was a lot of the early content about gridless, because I was so brainwashed early on at how our energy systems work and how they function, and really just didn't have a good understanding of it. And seeing how gridless could bring energy to a community that previously had none was a light bulb moment for me, realizing, oh, this isn't just a bunch of profiteers and energy pirates going out and trying to find some wasted energy that they can use. This is a public good that nobody seems to understand, and probably the most interesting story that's going to be told for the next couple decades, that's just starting to get its foothold in places that hardly anybody's talking about. So, I mean, if nothing else, just the model that gridless takes to impact local communities, bring energy prosperity, and if you've seen Bitcoin Shooter's video of the farming family, like seeing what it does to people's lives individually, a much more compelling story than a warehouse filled with miners in the middle of a field in Texas that's not necessarily contributing to anything. So I think you're putting your capital, your time, your energy, and thought into the right parts of this industry that now actually have a chance to impact people and change their lives in a different way. And same with Ocean. There's the reason that we're in this to begin with is because we're trading counterparties for independent access and disintermediation, and part of that process is not being able to be censored by Antpool or whoever controls, in the shadows, the majority of hash power. You want that to be as accessible and as random and subject to the current process of finding that nonce as it possibly can be, and not have anybody standing between you and getting whatever transaction you need to get through to that other party on the other end of that.
Yeah. Well, that's awesome, man. I'm glad to hear that part of your story. That's cool. I'll have to tell them. Did you talk to them yet?
To the guys at Gridless? Haven't met Eric yet in person.
Oh, cool. Well, you should go to one of the Myra, or what do they call it? Not Myra, the African Mining Coalition. I forget what they called it, but there's like this conference they do every year. I don't know if it's in Kenya or where, but they bring up a whole bunch of miners in and just talk shop.
Would love to. Let me know when you're going.
Yeah.
So, I mean, those two are mining space specific. Is there anything else that you're currently invested in that you feel like is really reshaping the way that, whether it's payments, layer twos, lightning, other ventures that you feel like are going to be extremely important in our space over the next couple of years?
Yeah, actually, there's one that because I'm in this sort of position now where I'm one of these, and this is something that will be relatable to anybody that's an entrepreneur in here, likely, especially in real estate. You've got a bunch of digital property with Bitcoin, and you don't want to just sit on it and retire. Like, you may want to upgrade your lifestyle. You may want to buy another house to rent out. You may want to like utilize the capital in some way. If you are somebody that's like we talked about earlier, the 90% of people that are like consuming instant gratification content on social media, likely you're not that 1% entrepreneur that's gonna invest in your own self and make that work out. Likely you're probably somebody that just wants to work a job, like I said earlier, work a job, earn a money to get paid fairly for your labor, and then have that savings hold its value. You don't want to become a trader. You don't want to become an investor. You don't want to become a entrepreneur. You just want to work, enjoy your life, and then have money to retire with. And because you worked so hard and you did things right, you've got a nest egg that's going to last you and your family through the rest of your life, and leave your kids with something. Like, that's the dream, the American dream from like the olden days. But in a world of infinite money printing and M2 growth, we don't have that reality anymore, because you have to continue to seek higher and higher prices for everything, otherwise the whole system blows up. So higher and higher prices means your purchasing power declines if you're just that saver. And people took on too much debt with low interest rates, and now that's sort of coming to roost as well. A lot of middle class people are now about to come into like higher than they expected monthly payments to finance their lifestyles with the high values of their homes and cars and whatever else. So we got this crappy situation brewing, and maybe there's going to be opportunity like in that chaos. That if you've got some digital property, some Bitcoin, that's this pristine collateral, as it's referred to by like Preston Pish and people like that, it's better than a house in terms of to collateralize it, because it's with discrete log contracts, which is Bitcoin smart contracts, you can set up conditions where the lender has equal access to that Bitcoin as you do inside of a loan agreement. So if you were to say like want to access your Bitcoin to take a short-term loan to do whatever, to like maybe buy some foreclosed property, if you're that type of person that's like, when everybody's fearful, you get greedy. When everybody's greedy, you get fearful. That sort of mentality. There's going to be some fearful people up in the next little bit here, I think. And you may want to access your Bitcoin value without selling it. So whether it's that situation where you want to access the value of your Bitcoin without selling it, or the situation that somebody like me finds himself in, where I have been just like, I've got like freaking strong hands that have been forged in the hodl fires of 13 years holding Bitcoin. I got calluses from holding Bitcoin so long. I can hold on, right? More, I can hold longer. Don't tempt me. I will hold on for another 13 years. Okay, but I do want to upgrade my lifestyle a little bit. Like I want a little bit more money. Some shitty fiat cuck bucks to go buy a bigger house. So for the situation where like I'm like to reward myself for all my hard work and being right and my patience. But so now I'm faced with this decision of having to sell some Bitcoin and pay capital gains taxes. And that is just not smart to think about. Like, it's painful. Like, I've been deliberating over whether or not to do this all year, and every time I come back to, no. Like, why would you do that? We haven't even gotten started yet. This bull run hasn't even started. We just exited the accumulation phase, and we're entering into a bull market in 2025, and, like, it's the dumbest thing anybody could do is to sell their Bitcoin right now before the big show starts. You will regret it so much. So that's
turn
on
your
me.
miners off, people. I don't care what the economics are doing.
Yeah, that's the same thing for the miners, like mining the Bitcoin. I'm talking to myself here. Like, this is what I tell myself. And every time I'm like, okay, I'm going to do it. You deserve it. You do it. I'm like, no, you idiot. What are you talking about? Like, didn't you learn any lessons from before? Why would you, do you expect Bitcoin to stop going up? No. So why would you sell right now? So, like, that's a real dilemma that Bitcoin, like, maximalists face, that Bitcoin miners face, right? So I think, to answer your question more directly, I think that, like, lending services are going to be very important going into this next phase of Bitcoin as a reserve asset and a treasury reserve asset for corporations, individuals, families, citadels, companies, countries, whatever it is. Bitcoin needs to be Bitcoin needs to be able to have reasonable rates to borrow against and no counterparty risk, or at least minimize counterparty risk. And so companies like BlockFi and Celsius and Voyager and all these like high flying finance DeFi companies
Wildcat
of the last
banks.
Yeah, the Wildcat banks, like they were all just playing fast and loose, and they were just Ponzi Palooza. Let's just loop all of rehypothecate over here and give it to 3 Hours Capital, and then they'll put it in Solana, and then Sam will take it and put it into Celsius, and then Luna will blow up, and then the whole thing's dead. So we we saw that happen. Thankfully, I had learned enough lessons already to realize that counterparty risk is a major concern. So you don't want to have your Bitcoin with somebody if you can help it. You don't want anyone else to have the ability to opaquely take your Bitcoin and give it to some fund who's going to give them a 5% yield or something, because likely that fund is taking too much risk and you're going to lose your Bitcoin. Michael Saylor talks about this as well, about like the development of capital markets and Bitcoin banking over time, and like it can't come soon enough. That's something that we all would love to have, the ability to borrow against our Bitcoin, pay reasonable rates for it, because it is so much better than real estate or securities or anything as a collateral. It's pristine collateral. It's the apex predator of money. It's the black hole of money. That's why BlackRock and all these, Cantor Fitzgerald and all these big institutions are getting behind Bitcoin. And with that will come reasonable lending terms. So there's like basically two options that Bitcoiners and say miners that are, which sounds like you're advising, which is smart, to like hold on to your Bitcoin. It's like the Michael Saylor example where, you buy a block of Manhattan in the 1800s. You don't sell that. You hold on to that. You finance it, right? It's Garrett Gunderson. What would the Rockefellers do? Like, why are the Rockefellers still a dynastic family today after hundreds of years, and the Vanderbilts are like, doing propaganda on CNN now to get paid? Like, it's it's like the difference is dynastic thinking, like generational thinking and proper structures, and not selling your stuff and training your heirs to also be smart. And it's two different. It's that's what we need in Bitcoin. So like counterparty risk is a huge deal. So we'll have options like BlackRock, covered call ETFs, and like kind treatment of Bitcoin into paper Bitcoin products, which is okay for a certain percentage of your Bitcoin, whatever that risk percentage profile is for you. A lot of Bitcoiners don't like the idea of paper Bitcoin. They don't like the idea of Bitcoin ETFs. Totally with you. But it sucks when we're in this period of we got something extremely undervalued, and we know that we want to hold on to it for another 10 years for it to realize its true potential at 10 trillion market cap, or 20 trillion market cap, global reserve asset status up there with 1 million a coin. But until then, there's all this growth that's going to happen in Bitcoin, and you got to be really patient and kind of, even though I'm very calloused, it's I want to let go a little bit, I want to let go a little bit. But so the temptation is always there to sell some Bitcoin, but then you're paying 25 to 35 to 45% cap gains depending on where you live. And that's crazy, because then you're just evaporating your digital real estate. It's just getting destroyed. And if you can hold on to it, and you do those calculations at 20-30% ARR over 10 years, man, that cap gains really eats into your returns. It's exponentially bad. So the idea is we need a way to use Bitcoin as collateral to get a Bitcoin mortgage or to get a Bitcoin loan that's decent percentage interest rate, prime, or SOFR or something like that, plus 1 or 2 or whatever. So 5, 6, 7%, you know what I mean? Borrowing the same rate you'd get with a mortgage or a tier 1 lender. And so I've been investing in some of that stuff, but it's still so early that you said a couple years. But man, there's this company that I'm invested in now that I don't know if I can say all the good stuff. There's tier 1 Silicon Valley VCs are starting to realize they made huge mistakes by betting on this DeFi stuff and backing BlockFi and all this stuff. And a lot of Bitcoin OGs are in this position where they want a low risk, non-rehypothecated way to borrow against Bitcoin using Bitcoin technology. And so they're investing their money where their mouth is. We're talking huge whales that are doing these calculations. They got thousands of Bitcoin. They're I don't want to be selling. Michael Saylor's buying it all. I know where this is going. I got to hold on to as much as I can. So I don't want to sell to buy my $30 million mansion. I'm going to borrow. So, or whatever they're buying. So yeah, there's options coming out. Lava is this company. It's called lava.xyz is the website. And it's using Bitcoin smart contracts. You lock your Bitcoin into a smart contract, like a DLC. A smart contract is kind of a shitcoiny word, but that's what it is. Bitcoin has had smart contracts since the beginning. Suck it, crypto people. Bitcoin does have smart contracts. So the DLC is the discrete log contract. It allows you to enter into a lending arrangement with anybody where you have a key, they have a key, and through this DLC, this smart contract, this Bitcoin smart contract, and this blind oracle model, which is kind of, some Bitcoiners aren't going to like this, but it's a way to have off-chain, so it's nothing to do with Bitcoin. It's on this Lava platform, this protocol, separate from Bitcoin. It's a separate protocol, but you're using Bitcoin on Bitcoin. You're not putting it on a layer 2 or a layer 1. It's using DLCs, native Bitcoin contracts. And then you have blind oracles, which would be trusted, kind of like Liquid Network has Blockstream and Bitfinex and a bunch of anonymous cypherpunk kind of Bitcoin firms and individuals are doing the multi-sig. They're the key holders for the Liquid federated keys. So you kind of trust. There's some trust involved, but the game theory works out because none of the oracles. So there's trusted oracles that are attesting to the price of Bitcoin, and the Lava protocol can check the terms of your loan, basically. And then you can borrow money, stable coins or whatever it is, dollars into your bank account from liquidity providers, so from lenders. And lenders are earning a yield, so same kind of like rates that you would get if you were a mortgage, getting a mortgage. You're paying that to this person that has dollars, and they have assurance that if you don't make good, they get your Bitcoin, or a portion of it, the amount of Bitcoin that would settle their loan agreement and the interest earned.
Because it's over-collateralized, right?
It's over-collateralized. You can choose how conservative you want to be, but it's like it has to be over-collateralized. So like I wouldn't recommend anybody do it any less than like 20% LTV. Like you should really have you should have the ability to weather 2 at least 50% drops, but 3 50% drops, which is about 5 to 10% LTV. So if you have the ability, let's say you're like needing $100,000 for whatever to buy this foreclosure that's like an irresistible deal, that like you're in real estate, you know that there's this great foreclosure opportunity, you don't want to sell your Bitcoin, you can borrow against your Bitcoin to do this deal. Maybe it takes you a year to like get the place, renovate it, sell it. Well, it's like 10%, whatever the rate will be, 5 to 10%, depending on interest rates, what the Fed does and the central banks. Because that's the real rate, whatever the real rate is, plus a couple percent, right? And then you pay your loan back, you flip the house, you make your money, you pay your loan back, you get your Bitcoin back. And it's never rehypothecated, it's never left custody of you and the lender, because the DLCs are making that happen. So it's not like a BlockFi situation, it's not like Voyager, Celsius, all this crazy crap. And so that's a company that is just kind of getting started now. I invested in them 2 years ago, and they've been building it, and now they're just going live. They just finished another series, like a seed series or Series A or something like that, with some big investors. And I'm considering taking a loan on there. So I'm doing my due diligence now. That's why this is on my mind, because I almost took a loan with this company, Equities First. I don't know if you saw me posting about that on Twitter. No. Oh, I did a call with these guys, and they're like, my God, the freaking irresistible terms they're offering. It was 5% interest rate, 70% LTV. They give you 7 days to make good on a margin call, and then they'll still give you extra time because like they're working on. It's like a white glove service, right? So if it's 7 days and you're like, I need 2 more days, they're like, okay, you take your 2 days. It's fixed terms, so it's like 1 year and 2 years. So it's perfect for like these situations where you've got an opportunity that is going to make you some money with like a foreclosure or something like that, or some sort of undervalued guaranteed like thing that is guaranteed investment of some sort that is it's not like an NFT launch or something, but some kind of like
underwriting
real
some
thing.
Miners, building some capacity, whatever it may be.
Exactly, whatever your specialty is in your hustler entrepreneur industry mode. Let's say you need $100,000 for that. Well, it does make sense to say like, okay, I'll take a 1-year loan, right? Like it's a lot of these lending platforms that don't rehypothecate, which means that don't take your Bitcoin and then try to generate yield with it by trading or giving it to a fund or whatever. They charge like 12 to 15%. So it's a high rate. So when these guys are offering 5%, they're talking about all these partnerships they have with banks and all this stuff. It's like, man, like, well, I found out that they're in a 9-figure lawsuit with Celsius because Celsius borrowed from them. And so what can happen with companies that rehypothecate? And I asked the guy on the call that I did with him about this, and he just kind of like brushed it off and didn't answer the question. I didn't realize until after that he was basically lying to me when he didn't tell me. Because anyways. So what can happen with lenders in Bitcoin and traditional finance people that have been operating in the traditional financial markets for decades, like this Equities First? They've been operating since like 2002. They've been through the 2008 collapse, right? Like they've been through the COVID collapse. They've been through the real estate bubble. They know how to deal with traditional stuff because traditional stuff gets bailed out probably. There's no lender of last resort in Bitcoin. Like, there's nobody that can just like print the Bitcoin that got hacked from Mt. Gox and just like make everybody whole. It's real responsibility, risk reward. It's like a real thing here. So these guys with their huge $billion credit facilities and all this stuff, they think like, oh, we're going to go into Bitcoin and we're going to do the same shenanigans we do in the traditional markets, and then, if we get in trouble, it gets bailed out. Maybe that's what they're thinking. Or maybe it's just hubris, like because they keep getting rescued, the traditional markets, like the stoppers get flicked, and then there's only so much they can lose, you know what I mean? So in Bitcoin, though, here's the scenario. You're like Celsius or some big entity. You give $100 million to a traditional finance firm, and of Bitcoin, right? So you give them $100 million of Bitcoin, and then they take that, they give you 50 million. Safe LTV, 50% LTV, safe 5% interest, right? Sounds reasonable. Well, something like 90% of the gains in Bitcoin always happen within like a 1 month period, or like a 15-day period, like 15 calendar days of the year, when Bitcoin goes really on a run. And these guys aren't used to that. Like, they're not used to this disinflationary cap supply rocket ship that Bitcoin is during those periods. And if they take your Bitcoin and then they sell it to generate yield, or lend it to somewhere to generate, and they're generating some yield, so they're now out of their position. They now took your $100 million of Bitcoin, sold it, because they got this great prop trading quant team behind the scenes that's doing statistical arbitrage mixed with trend following, mixed with mean reversion, whatever, tail risk hedging, and they're just so smart. They're using all the AI shit, and they're making 20% a year. Like, they're crushing it. They're making 20% in the traditional market. So they're like, yes, we'll loan to you for 5%, you silly Bitcoiner. We make 20% a year with our sophisticated algorithms and prop trading strategies. And then Bitcoin rips in their face, and they're now underwater because I have, with them, if I'm a big company with big Bitcoin, $500 million of Bitcoin with them, and they made $20 million off my $100 million, and now they're in the hole $380 million. And I say, I want my Bitcoin back, please, because, like, it's up a lot. It's just rose 5x over a year. And now they're like, okay, well, our algorithms are very sophisticated, and after 20 years, we can give you back your Bitcoin. Like, 20 years later, Bitcoin's worth $1 billion or something, or $2 billion or whatever, or more. It's probably like $10 billion. So, anyways, I'm just painting the picture of the risk of traditional thinking and conventional thinking when it comes to lending in Bitcoin. And that's what happened in 2021 and 2022. All these people thought they were so smart. They were hiring all these capital markets experts, and all the biggest firms from Wall Street and Silicon Valley are backing all this bullshit. And the value of the collateral just ripped, and then people started wanting to get their collateral back, and it's like, oh, it's in a DeFi Ponzi right now, I can't take it out. And then they start pulling all the money out, and then everything just blows up because they're all like neck deep in Ponzi schemes and traditional finance, bonds or whatever, which is given 3% a year or something, and trading, and just doing trading strategies that are crushing it. Like, trading strategies can crush it, but it doesn't hold a candle to Bitcoin if you just buy and hold Bitcoin. So that's the big risk with lending and Bitcoin with traditional thinkers. Even the most successful people, if they don't treat Bitcoin like the unique beast that it is, then they're gonna get caught. And so the idea is there's two ways to do it going forward. There's like assimilate in part with the traditional system, give some of your Bitcoin to BlackRock, Because if BlackRock, which has like a $10 trillion AUM, screws up on that side of the trade, they'll just get bailed out, or they'll just take it from somewhere else. Like, it's like too big to fail. You're at that point, you're kind of like, okay, I'm assimilating a portion of my Bitcoin with this scammy Ponzi traditional finance system because I'm going to leverage too big to fail to my advantage. And the banks will then see that I have some real assets, like, because most Bitcoiners that are mostly in Bitcoin and have the majority of the net worth in Bitcoin, like, we're kind of misunderstood. We just look like homeless people to them. We go in there trying to get a mortgage, and they're like, "Sir, you can't even afford razors. While you're trying to get a mortgage, you're unemployed." Like, that's the struggle, right? So
Bitcoiners are like self-employed entrepreneurs, but 10 times worse in the eyes of anybody trying to
oh my
extend
God,
their
it's
credit.
like, it's so funny because it's like 10 times better. I'm so much more liquid than the traditional clients they have, but I don't have a standard, like, fit in a box credit profile for them, so they're just not ready yet. But BlackRock, Cantor Fitzgerald, Fidelity, like, all the biggest banks in the world are going to be able to do this soon. This is going to be a problem that we will not have in 5 years. It's just going to be commonplace. You'll be able to take a loan against your Bitcoin with your bank. It'll be not a big deal. But at the moment, it kind of is, and you got to be very patient, or you got to find a solution. So the solution is like two-pronged. Like I said, there's like wait for traditional finance systems to be available. Then you just get in. You buy the BlackRock ETF with your in-kind Bitcoin. There's no cap gains because you just put your Bitcoin straight into the ETF through a like-kind treatment, and then you take a loan on your equities portfolio, which is a traditional way. You can do that now with your equities portfolio. There's that way, and then there's like the Bitcoin way, which is DLCs using Bitcoin as a pristine collateral with Bitcoin smart contracts. And then there's a bit of trust required with that system as well, because you are dealing with the dollar system. So you need to be able to, like, borrow dollars from an entity. So you got to deal with either stable coins or banks or whatever, or traditional lenders. But they're using this Lava Bitcoin protocol that is like a lending protocol using Bitcoin. So that, I think, is probably going to provide some grease. It's going to a little bit of a lubrication for Bitcoiners that are looking at some more expensive properties and nice cars, and maybe businesses they want to start. Maybe they want to start investing in Bitcoin mining again. Whatever it is they want to pull out some funds to do, there's now going to be...
They might just be levering up to get more Bitcoin.
That's another thing too. I mean, listen, I did the math on that too, because I was like, maybe I shouldn't buy this house. Maybe I should just buy more Bitcoin, because the real scenario there is, the lower that your LTV can go, the more safe the loan is. So if you only have the comfort to have like a 10% LTV, but you want to really have a 5% LTV, which is the most conservative. I mean, 1% is the most conservative, but that's insane. 5% is like, you will be able to survive 50% drops. No problem. You will not be in a vice at all, right? You borrow against your Bitcoin at like a 30% LTV or whatever, and then you buy Bitcoin with it, and then you put that Bitcoin in as collateral, and now you're super safe. Now you've borrowed the collateral to make your loan safer, and you got more Bitcoin. So it's like, that's the strategy. I was thinking, man, should I buy this house and upgrade my life, or should I just like make my loan more safe? So that's a pretty good strategy too.
These are real risk mitigation conversations that need to be had. How do you get your hands on more Bitcoin with the lowest time preference possible?
Yeah, and the other way is that my entrepreneur mind has been reactivated through joining Dan Martell's coaching program, and doing his sort of all of his exercises around achievement roadmaps, sort of goal setting, and learning, like listening to all the like insightful things he says to entrepreneurs in all kinds of different fields. It's kind of like bringing back all my old interests in entrepreneurship, and I had kind of been telling myself a story that I wasn't a good leader because I scaled up my startup way too quickly. I did the bloated startup mistake. Like I told you earlier, I had the lean startup at the beginning, which is the way to do it. You bootstrap with literally it was three of us in a basement type of thing, no overhead, $200,000 a month. That's the best, that's the way to do it. Then I was like, well, now I'm going to put all that money back into the business and scale up a big team and make 10x the money. If I have 18 people, I can make 18 times the money. Well, we did the bloated startup thing and it didn't work. So I had been telling myself this story that I'm just a good investor. I'm not a really good leader. I got lucky as an entrepreneur a few times, but really I'm just I'm hitching on to the inevitability train with Bitcoin. Am I going to beat 25 to 50% ARR? Probably not. So let's just keep supporting Bitcoin, invest in Bitcoin businesses, and just hold on to as much Bitcoin as I can. But now I'm man, I could borrow some money using one of these things like Lava or something, invest in some businesses, and probably with the skills I'm learning from Dan's program and getting back in the driver's seat of being an entrepreneur, I could probably generate 25% a year or more. That's a good little use of my time. So I'm in the process now of trying to start my own businesses, but really kind of I'm at the phase of my life where I can do the thing I want to do rather than I need to make money. So I've got this interesting ability, thankfully, because of Bitcoin and my conviction in Bitcoin, to be choosy about what I do and what I spend my time on. I see a lot of people that are doing Dan Martell stuff that are they're trying to get to the point where I am. They're trying to do these things to get to the point where they have the time freedom and the monetary privilege to be able to do whatever the hell they want to do. And I'm just kind of getting back into things. So I'm I don't need to do shit. Bitcoin is just going to do it all for me. I don't need to do anything. But then I realized that you know what? That causes me to be lazy. That causes me to not go to the gym, not take care of myself, not build leadership skills. So I've kind of atrophied some valuable muscles over the last 4 years. I've spent a lot of time reading and learning and studying history and learning a lot about money, and it's served me very well financially, but I was I was under indexing the value of entrepreneurship and leadership skills, investing in that stuff. And so now I'm kind of disconnected from a lot of negative daily stuff, weekly stuff. I don't care about politics anymore, really. Whatever happens is going to happen. It's just poison. It's just mind poison for me and my goals and my family. And I don't care about Bitcoin drama anymore. I don't follow the Twitter drama. Used to be all these debates with real estate people and crypto people and all that stuff about Bitcoin. I'm it's adds nothing, right? So that's my new thing was for this year. It was disconnect from all the negative inputs, focus on the Citadel mindset, which is there's a meme in Bitcoin about the Bitcoin Citadel. If your listeners have not heard about it, they could probably just Google it or whatever. It's pretty common in Bitcoin circles, the Bitcoin Citadel meme. But I started thinking when I joined Dan's program, I was could I actually build a Citadel? If Bitcoin goes to where we think it's going to go, $1 million a coin, it's you're going to be able to build a Bitcoin Citadel if you don't screw up the next few years, if you mine enough, if you buy enough, if you generate enough income to dollar cost average into Bitcoin, you'll have the wealth required to build a Bitcoin Citadel. But will you have the skills to do it? The leadership skills and the relationship skills and the time management skills. And I was holy shit, no way. I couldn't do that. There's no chance. I can't even get my lawn mowed. How could I build a Citadel? You know what I mean? I can't even get my ass in the gym once a day how can I build a citadel? Like, that's obscene to think about. So I started refocusing around building a citadel mind and building a citadel body so that I could then also build a foundation, like a Bitcoin citadel foundation. Because I was thinking about it as Bitcoin is like a digital impenetrable fortress. And you have the ability to harness the impenetrability of Bitcoin. Anybody in the world has the ability to use those walls, use that resource, that like digital energy wall, and start building your citadel. Like, a citadel is really just it's like a fortification in times of distress and rough times, where you can just have some refuge. And if you think about Bitcoin, the network and the cryptography as this ability for you to build an impenetrable digital fortress, you can then use Bitcoin to actually build the foundation of a citadel. And this is like, a metaphorical thing, right? But I just kind of took that philosophy over the last year of, okay, I'm going to think about this like it's real, like in 10 years, like I want to have a citadel on the ocean, like a real one, and a private jet that I can fly back and forth between my citadels. I have a couple of them. But then if I want to do that, I got to acquire as many Bitcoin as I possibly can, protect it from my FOMO sapien side, build a citadel mind and a citadel body, and learn as much as I can about leadership and just focus on those goals and like kind of like level up so that I look like my Bitcoin wallet. So that's like what I've been trying to do over the last year. And part of that decision led me to just kind of challenge the idea that I should sell any more Bitcoin ever. Like, I should try not to ever sell any more Bitcoin if I do want that. If like that's a goal of mine, I got to like figure out, how do I make more Bitcoin? Not how do I fund my lifestyle, like how do I actually generate some value, acquire more Bitcoin, and level up as like as a leader and an operator, so that when it comes time, I actually have the ability to control that level of wealth. Because like the early Bitcoiners and even the Bitcoiners now that are getting in and putting some serious conviction into Bitcoin, if this goes to where we think it's going to go, there's no chance you're not going to be extremely wealthy. I just don't see it if you don't frig it up. Like, if you make the mistakes I made in your Bitcoin journey, I'm sorry for you. I'm so, like, please do not do that. Use me as the example. Don't YOLO. Protect your FOMO sapien side. Put up the citadel walls so he can't get in with multi-sig. And just invest in that, like yourself, your mind, and leadership skills. I think is very important.
Beautiful, beautiful way to round it out and bring it back to what we can do as individuals and what we need to do as individuals. You've got the greatest asset in the world. Now it's your job not to fuck it up and be the person who isn't worthy to hold it and make the most of it. And along those lines, I mean, one of the parts of Dan's program that's been most impactful for me, and just in terms of mantra, is you've got to become the person that you needed most in your darkest days and share that person with the world. So along those lines, what's your piece of advice to Brad in his darkest days, who may be just like someone who's listening to this, help them out of that hole?
Yeah, honestly, like, that's what I kind of caused me to get into this program and this mindset. Was I was not happy. Like, I was pretending that I was happy. I was like, it wasn't my darkest days, but it was like even last year. Like, I was just finding myself agitated all the time, getting into arguments with my wife over stupid things, like being negative around my daughter, like for no reason, because she ate too much chocolate or something like that. Like, and it wasn't until I read the book The Big Leap this year, which Dan recommended I read, because I was asking him like how to get into that mindset, right? So I read The Big Leap, and The Big Leap has this exercise where you identify what's your superpower. And it talks about like getting into your genius zone, which is this sort of concept of spending your time doing the thing that you're the best at, that also adds the most value to the world, and that like time just can fly by while you're doing it, and you're helping advance your passions and your mission, and you're helping the world in a way, right? So that's your genius zone. And it's like typically people have some sort of superpower that's like something that as a kid they were known for doing, like whether you can really read people's energy amazingly well in some way, or you just have a really good knack for finding really good opportunities, or whatever the thing is. Like usually there's like a superpower, like when people like each other, or when people don't like someone. Like you have some kind of superpower, and that you can like harness that in a way to like help you get into that genius zone, and use that as an anchor towards doing what you love to do. And I realized that like my superpower is I can see the future, because that's been the story of my life. I've just continued to identify opportunities and pitfalls that were coming, that I could see ahead of 99% of people, like Bitcoin, like Facebook, like the pandemic, like the COVID crash, like all these things. I can see things coming because I soak everything in as much as I possibly can. I have this, like, I've consumed so much that I'm not consciously smart enough to figure it out, but somehow it gets ground up into my brain and like comes up with an idea like, hey, I should do this, and then that has been my superpower. And then also on the flip side of that, I just realized this year that it's also my biggest boon, or my bane. I mean, like that's a boon for me, but also a bane, because that can also cause me to catastrophize. So when I can see positive things about to happen, I can position myself and take advantage of these trends, or protect myself from a road bump or like a pitfall that's coming. But then I was not realizing it. I was doing the same thing with my life generally. And all the negative content I was being programmed with and consuming through Twitter and Facebook and podcasts about macro, and I got to follow the war in Ukraine, I got to follow the Israel-Palestine war, I got to follow the election, I got to follow blah blah blah. Well, when you get into that mode, you just, at least some people like myself, I found that was just causing me to just focus way too much on toxic, poisonous potential outcomes. And so I was like unconsciously just always in a negative future, even though I was financially successful and I had achieved my financial goals and dreams that I had set years ago. And in the mindset stuff, I was setting goals, I was writing down what I wanted to do, but then I would go on Twitter for 2 hours. Or then I would like listen to a podcast about, warographics was a great one. I was just like, I got to catch up on the latest conflicts in the world. Like I got to be abreast of all this stuff. And I realized like that is what's causing me to be unhappy. Like it's not healthy for me to be consuming all that negative shit if I have this personality that can see the future like that, because then I'm looking at all the negative and I can't control it to get to the point where it's like, this will happen if this continues. So I like catastrophize with just the way my mind would work, and then I would find myself doing that around the house. So my daughter would go to bed late, she'd be on her screens that day for 6 hours, and I'm like, holy shit, if she continues this trend, she's gonna be brain dead, like she's not gonna fail at life. I would put myself like 10 years in the future if my wife continues eating all these donuts. You know what I mean? It's like, oh my god, I'm gonna need to buy extra large underwear here. This sucks. You know what I mean? Like I just put myself in all these mindsets like, with myself. I'm like, I can't control myself around the movie theater. I'm like, I go to the movie theater, I'm like, I'm just gonna have a couple bites of your popcorn, and then I'm going for nachos and a hot dog and a friggin' pack of M&Ms and a large pop and an extra butter layered popcorn. I'm like 3,000 calories later, I feel like a piece of crap. I'm like, this is who I am, I guess. I can't control myself. So like I would catastrophize. And Dan's stuff, along with this YouTube thing for anybody that's interested in kind of like observing, it's called The Strangest Secret by Earl Nightingale. I came across that in January, and I just watched that, and then I watched a couple more Earl Nightingale videos. Old stuff, like from the 40s and 50s or whatever, but
great.
it like applies really well. I was like, man, this is good stuff. So getting into the goal setting mindset is something that really affected me positively this year, and then doing the work of identifying like what my superpower is, realizing that this was a thing that wasn't just a boon but also a bane, and that I needed to disconnect from negative inputs in order to have the work I was doing on the positive goal setting to really start to shine. And then just doing the daily non-negotiable activities of reading, exercising, eating right, and there's some other ones that Dan says, but like I don't have a business yet, so I'm not like opening DMs and talking to people and doing sales and stuff like that. But it makes sense. If you got a business, you got to start focusing on getting yourself out there, doing podcasts like you're doing, putting out content like you're doing. And then when people follow you and like you, it sounds so stupid, but you reach out to them and you say, hey, thanks for following me. Do you want to work together or whatever? Right? Like I was advising another Bitcoin startup, and like I swear to God, like they weren't doing that. And this is a company that I really believe in. They protect you from SIM swaps. It's called Cloaked Wireless. And so everybody that has Bitcoin should have a Cloaked Wireless SIM account. Like because it's so easy to get SIM swapped and get social engineered. And if you have all your 2FAs set to your main phone number, like there's a lot of services that still use text message 2FA, where it's like you log into your bank account or whatever it is, and then they send you a 2FA code to your SMS number because all you have is your main line. Well, then you get social engineered. Your number gets ported over, and now those text messages are going to the hacker's phone, not your physical phone, because they got your phone number now. So if you have your main phone number as your 2FA for SMS, you're very much at risk of getting SIM swapped and having lots of problems created in your life. So Cloaked Wireless is a way for you to buy an anonymous, with Bitcoin, SIM that's like a secondary SIM that's either an eSIM or a physical SIM, that you can now have an anonymous secondary phone number that you can give to all those services. So you can switch all that shit over to this phone number, and that way if somebody, and because there's no way they can find that really, like it's not tied to your name or anything. So now if someone SIM swaps you, the worst thing they're going to do is start sending text messages pretending to be you. Like they can't get into your email, they can't get into your bank accounts, they can't get into your WhatsApp and Telegram or any of that stuff, because they're not getting SMS messages, because the SMS go to your anonymous line. So anyways, I think that service is like a massive need for everybody in Bitcoin, even in crypto, high net worth celebrities, whatever. Everybody needs a secondary anonymous SIM. So they got like 1,000 followers on Twitter because they launched earlier this year. And I was like, you know what? Like, I wonder if they're doing this. So I had a call with them. I was like, are you guys actually like doing like DMs? And they're like, no, why would we do that? I was like, oh my God, such low hanging fruit. So I was like, I taught them about the strategy that Dan teaches about, like, posting content gets you the followers, and then you got to go viral with like viral content to get you lots of followers. Then you post stories to build trust, and you post like trust posts to help people feel comfortable with you. And then when people interact with you, you actually message them and you say, do you want to be a customer? And then they started doing that, and like boom, like they got like 70% response rate from outreaching to people that follow them on Twitter. And it's like, people want the service, wouldn't you think? So anyways, like Dan's stuff is just in some ways so simple but so effective, and that's what I learned with the daily non-negotiables, with like, just go to the gym every day, but you gotta have a mindset of like a big mindset. Like mine was like, I want to be able to make gravity my bitch for my body, like I want the Citadel body. I want to be able to do a friggin' backflip and muscle ups and planche push-ups and gymnastic flips and all that stuff. If I was given like 10 years, 20 years to figure it out and practice every day and eat right and do all that stuff, I'd be able to make gravity my bitch for sure. So it's like, you got to dream big, whether it's your fitness or your finance or whatever. And so it wasn't until I actually got back into the mindset of like, dream big, then do daily activities that get you to the dreaming big goal in the future. Just be consistent and, actually have a coach. Because that was something I never did before. I had done all the secret stuff. I made a vision board. I wrote myself a check and I carried it around in my wallet. And actually, a lot of that like law of attraction stuff did work for me. I achieved all my financial goals. But mentally, I was not happy all the time as much as I should be having the success that I had. Because I was just inundated with like toxic Twitter, politics, macro bullshit. And I was like, oh, that's the aha moment there. Replace all that shit with a coaching call and a podcast that talks about mindset and going to the gym and like conversations with my family members and date nights with my wife and family meetings with my daughter and like playing with my dog in the sun and like going in the sauna. You know what I mean? Like, so I cut my screen time by like at least 60-70% and replaced it with like shit that you should do. So that would be my advice to myself last year, not even my old self. Like my self last year was like, just control your inputs and like focus on your goals and just think bigger and then take daily consistent action. And like anything that you can think of, you can have over a long enough time frame.
Anybody that's made it this far, you've been listening to Brad now for a couple hours, and we said early on, and this is something I first heard from Dan as well, you don't take advice from someone you wouldn't want to trade places with. And I think, Brad, you are someone who many people would not mind trading places with for various reasons. And it's largely because of the work that you've done on yourself just in the last year. So not that there wasn't a ton of work in the many years before that, but you've definitely turned a corner, and even just in the time that I've been watching you from afar and known you, it's been clear the transformation in both your attitude, your disposition. I mean, dude, you're ripped now as well, which is awesome.
I'm trying. I'm getting there. Thanks, man. Appreciate it.
So. I think anybody can take this. Anybody can take any of this advice and change their life with it.
That right there though is like another thing that I gotta throw in, that the mental burden that I had before I started to do the daily consistent actions of eating right, measuring my weight, doing macros properly, and going to the gym every day. Every time I would look at myself, I would have this little nagging feeling of like, you're a piece of shit. Like, why don't you go to the gym? You know what I mean? It's just like, why don't you do it? I would have that. And then it didn't take very long, like 3 months of going to the gym and doing the consistency of doing like the meal plans and the fitness program and going to the gym every day, that like, I like actually like have a nice shape now and I look in the mirror and I'm like, man, I got like biceps. Like, I know this isn't really what this podcast is about, but I look at myself in the mirror now, I'm like, nice job, man. Like I seriously used to look at myself and I would just like, oh, like you're too fat there and you don't have enough shape there. And like, but like it didn't take very long. Honestly, it was like, it took about a year of like really, cause I made the decision last year to start eating healthier, but I didn't start the weightlifting. I was just doing this like gimmicky like VR boxing workouts and all this minimum effective dose bullshit. It's like 80-20 stuff from like Tim Ferriss back in the day, like slow carb and all this bullshit. And I was like, oh, I just want to put in 20% of the effort and get 80% of the results. And then I would just like feel bad. And then I'm like, I'm going to do what Dan does, because Dan looks incredible. He's had a crazy transformation physically. I'm like, I want that. So I just did it. And I'm like, the mental lift that you get from actually like looking good and being confident about the way you look, it's just as good as disconnecting from Twitter and all those politics and stuff, because it's another negative input that you like remove.
Changes your ability to earn as well. I mean, you can correlate it directly with what you can create in the world as well. You've got more energy, you've got more clarity, you've got just more ability to be a better version of yourself in every situation. And I mean, you've heard it just as much as I have in the last calls. Everybody who's done the work on their bodies has also hit records in their business and in their personal financial life. So it's not uncorrelated at all.
Yeah, and I mean, maybe some people are already fit, and it's like, 'cause I got a buddy who's just like, he's into Bitcoin now. I got him into Bitcoin, and he's like 6% body fat, jacked, and he's been fit for most of his life. So I asked him, like, hey, does this affect you? Like, do you have this phenomenon of like looking at yourself in the mirror and like feeling good? Like, hey, you did good. You look good. And he's like, well, no, because I've been fit for 20 years now. I kind of look at myself. I'm like, that ab is not big enough. And like, he's like critiques himself. So I don't know if this is applicable to people who weren't like either too skinny or too fat. Like, I was 200 pounds, 33% body fat when I was an entrepreneur building those games and doing that shit on Facebook. So I was just focusing on making money. I didn't care really too much about health. I didn't know what was healthy, what wasn't. And it was like that. So like, I had all this negative mindset baggage from back then that I carried with me for, 13 years of being in Bitcoin. So like, I'm in the best shape of my life right now. So I don't know if somebody's already fit or they've been fit before, this might not be as strategically useful. But man, I'm telling you, if you're somebody that's been overweight or didn't like the way they looked because they're too fat or too skinny or whatever, it's not just like, oh, exercising releases endorphins, tame the body, exhaust the body, tame the mind, stuff that Dan says. The good energy, the energy boost you get, like all that stuff is a thing. But if you had like self-image issues, or if you still have them, invest in yourself, and like, you can remove that. I thought I didn't think I was ever going to be able to get over that. I was like, I'm 40 now. I'm either going to have to like get bicep implants or start doing horse testosterone or something like that in order to actually look good and get a six-pack and stuff. But it's so crazy how if you have normal T levels, which I do, it's like middle to low end. I don't have like high testosterone or anything. I wasn't doing creatine. I wasn't doing protein shakes. I wasn't doing anything. It's just all natural food and working out a lot, like an hour a day. It's not even a lot. It's like 5 days a week, an hour a day. But the kind of results that you can get from exercising is similar to the kind of results you can get from stacking Bitcoin and dollar cost averaging into Bitcoin. Over a long period of time, those daily consistent actions of eating the right foods, moving your body, they build into a Citadel body. And like the same thing happens with dollar cost averaging into Bitcoin and using Bitcoin and harnessing the inevitability of Bitcoin as your treasury reserve asset for your Citadel or your business or your whatever. Over time, it's the same thing. Like you're harnessing the inevitability of consistent action. Like Bitcoin over 10 years, saving in Bitcoin, I don't see how you're not extremely wealthy and reach your financial goals, the same way that I don't see how going to the gym for an hour a day and eating good food over 10 years, you're not going to make gravity your bitch and doing backflips and whatever the hell you want to do. So it's the power of goal setting and then just doing it.
Where can people find you, keep up with what you're working on, stay in touch, and see how you are building a Citadel and watching the results that you create over the next few years?
Yeah, well, I'm mostly nowadays on Instagram. I'm on Nostr as well, but I'm not going to like repeat my Nostr and pub. N17XQBPUDW. Find me on Nostr. Oh, we're so early with Nostr. But with Instagram, it's at Brad Mills Can. I'm also on Twitter, but I don't tweet a lot anymore. I try to remove myself from Twitter. And I don't know, maybe we'll do more stuff together if we do a media company together. That might be a way to find me in your videos.
Sounds fun. Look for more appearances from Brad and all of the Abundant Minds content. And closing out, just want to say thank you for your time, Brad. You were extremely generous to sit and share. And I mean, seriously, anybody who's sat through this, like you're absorbing someone who has been through every kind of fire that you can imagine in life and has come out in what I would say on top. I mean, you're doing pretty good right now, and it seems like up is the only direction that you know from here on as well. So
Yeah,
keep
man.
up with Brad, and man, absorb his wisdom. There is something for everyone in this, and can't wait to do it again with you, man. Thank you so much.
Thanks, Bo. Appreciate the invite, and I promise next time I'll talk less.
Don't you dare.